rules are reasonably decent for product safety, but local governments have the responsibility for enforcement, and often they don't have the incentive or the ability to do the enforcement. And that's a challenge. Wen Jibo said, China's economic growth is unsteady, unbalanced, uncoordinated, and unsustainable. It's got to be rebalanced. You've got to move away from investment because you can't continue to invest nearly half of GDP. Net exports have come down from 10% to 2%, but something else has to pick up, and what really has to pick up in the longer run is consumer spending. Consumer spending in Japan is only about 35% of GDP. In the United States, it's 70%. I can argue 70% is too high. But in countries like India, it's about 56%. And frankly, even in China, back in the 1990s, it was over 50% of Chinese GDP. It needs to be rebalanced. There has to be an ability to China to live better. The cautionary tale. The imbalances can't continue. Let's see. I want to go on. These kind of growth spurts. But the cautionary tale is what happened in Japan. The Japanese economy had a similar period of extremely strong growth from 1949 until 1974, and then slowed abruptly in 1974. The reasons for the slowdown were multiple. You had a rise in oil prices. Japan's extremely dependent on oil imports. They don't have much of any domestic energy resources. In addition to that, that's about the time where productivity in Japanese manufacturing caught up with the rest of the world. So there wasn't much new technology to steal anymore. You had to develop your own technology. I'm not arguing. The Japanese have been very good at developing new technology, but it still slows you down. Growth slowed down from that roughly 9% average that you had seen for 25 years to about 4.5%. 4.5% is not bad, especially for a country that's a relatively wealthy country, which Japan was at that time. But then there was a further downshifting after the financial crisis in 1987, 1990, to more like 1%. And actually negative per capita growth for over 20 years now. Is that China's future? And what can China do to avoid that? And I think you've got to learn the lessons that Japan, from what Japan didn't do. Japan maintained a relatively high saving rate through that period. That meant there wasn't enough consumer spending to absorb Japanese production. They couldn't continue to expand their trade surplus. Abe is trying it again now by quantitative easing to reduce the value of the yen. But there's a limit to how big a trade surplus you can run because you've got to find somebody on the other side willing to accept a trade deficit. And suckers aren't as easy to find as they used to be. It's harder for China to do this than Japan because China is now a much bigger economy than Japan. You allowed a bubble to develop in the Japanese stock market in the 1980s. The Nikkei average hit 40,000 in 1987. It then went down to 7,000. And even today, we're still at about 16,000. Property prices in Tokyo, commercial property prices plunged about 80% when the bubble burst. Do we have to worry about a similar bubble in Beijing, Shanghai? Because there are a lot of worries about overbuilding in this market and overpriced structures in both residential and office structures. Can China manage to avoid these mistakes? Can they manage to rebalance the economy, getting the Chinese to save less and spend more? And what kind of changes are going to be required politically to do this? And will those changes be made? So that's where I'm going to leave it. I don't know the answer. My basic feeling is, like Japan, you're going to see a bit of a downshifting of growth in China. The government is quite happy with growth shifting down to sort of 7.5% from the 10% that we've gotten from the last 35 years. And if they can manage that, it's not bad, because 7.5% is still pretty darn good. But if there's a further downshifting to more like 3 or 4%, that's going to be a lot harder to handle. And one problem when you downshift is sometimes the engine stalls. And can China manage to avoid that kind of stall? Sort of run out of time, so I think I'll stop and ask if people have questions. Do a more Q&A session from here on. So, questions, comments, complaints?
Yeah, I have a question. There are some opinions. It's really very straightforward, saying that the productivity of a country as a whole is limited by the technology, development of technology. And they say that continuous growth of China's economy over the past 35 years is just an illusion. It's just a normal, process of China catching up the average productivity of the world by stealing other people's technology. So since China is already at the average level now, it's impossible for China to continue its growth. Do you think that makes any sense?
China's not up to the productivity level of the rest of the world yet. You're still looking at per capita GDP in China, which is about a quarter to a third what it is in the United States. Now, it's catching up fast, you understand, but it's still got a lot of technology left to steal. You're not done with that stage yet. At some point, though, that's what happened. That's what hit Japan. Exactly, and you can date it. When productivity caught up to industrial country levels, when you caught up to the state of the art, it becomes a lot harder to grow. And that's what Japan hit in '74. It's what Europe hit about the same time. China will hit that, but I don't think it's there yet. I think it's got another 10 or 20 years before it reaches that level.
You alluded to the housing bubble potential.
Yeah.
And
construction bubble generally, I think office buildings are even worse.
So I was wondering your perspective on the role of massive credit expansion in China and the related role of the shadow banking industry in that, as far as China's future growth prospects and whether reform needs to happen, how will that happen, what will that look like?
Well, the good news is the government is reasonably aware of the bubble issue, and it saw the bubble hit Japan. It's another example of learning from somebody else's mistakes. And they're trying to avoid it by tightening up credit standards on construction mortgages. So you have to have a lower loan-to-value ratio, you have to have a lower loan-to-income, debt service-to-income ratio. So they are conscious of the bubble problem, and they're trying to restrict it. But they're sort of going against themselves because at the same time, they're trying to expand lending activity by the banks. And you got to figure out who's going to get that loan money. Is that just going to create a bubble somewhere else in the economy? So I think you're right. They're trying to have it both ways. And I'm not sure that they can do that. I think you may just get another bubble inflating somewhere else to offset the bubble, or to replace the bubble that they're trying to deflate slowly in the construction markets. The other point is, I haven't found anybody yet that has managed to successfully deflate one of these bubbles gradually. They always seem to pop.
So should we predict then massive deleveraging in the next couple of years? Like just spontaneous?
The price-to-income ratios have to come down. That's going to come in one of two ways. Either there's going to be a period of relative stability in prices while incomes catch up with them, or there's going to be a sharp reduction in prices. Normally, I'm uncomfortable with the idea of prices stabilizing while incomes catch up. But China's growing fast enough that they might just pull it off. Because in the United States, it was hard to do. In Japan, it was impossible to do because the country was actually shrinking. But when you're growing, even if you grow at 7.5% a year, maybe you can do it. So I'm not going to write it off, but on the other hand, I wouldn't be totally surprised if we suddenly wake up and find that there's been a 25% drop in prices of real estate in Shanghai.
If that happens, do we see a deflationary spiral like what happened in Japan?
No. Deflationary spiral in Japan, how do you get out of these problems? If you have a bubble, like the housing bubble in the United States, housing price, there's only two cures. You build too many houses at too high a price. Number one, you've got to bring prices down. So the drop in price, US prices went down about 25%. And you've got to stop building so demand can catch up with supply. And that sort of has been working in the US, and you're starting to see home prices go up. The problem in Japan is you had the price drop, but they've got a shrinking population. How do you absorb that excess supply when demand is dropping instead of rising? And that's what really created the deflationary spiral in Japan. It's caused by the demographics in part, and the declining population, declining workforce.
Yeah, so we can clearly see a bubble in third and second tier city in China. But what about Beijing and Shanghai? Because these cities, they don't grow out of sheer market forces and capital forces. They're policy cities. And in China, you cannot get your business running without presence in Beijing.
Yep.
So there is this big city bias. And also there are imbalance of opportunities.
Yeah.
How do you take this into the consideration of the real estate bubble?
Yeah, that's an issue, particularly for Beijing, I think, that the demand for housing and related stuff is just so strong in Beijing that all the government has to do to stabilize a potential dropping bubble is let people move in. I mean, if there's an empty space, somebody wants it. You're restricted now. I mean, how do you move to Beijing? You need to get a permit to go there, at least in theory. So if there's a decline if there's some vacancy rates opening up, all the government really has to do is open up the possibility of moving to the big cities, and people will do it. So you may be able to avoid it in those, particularly in Beijing, maybe in Shanghai. But when you get down to the second tier cities, it's not so clear that you can avoid it. There's too many empty buildings. Of course, maybe if the construction is as bad as I suspect, you may get further by the other collapsing real estate prices may be offset by collapsing real estate in the literal sense.
Yeah, it seems that everyone still believes that China will grow,
Yeah.
at least in the near future. But also, on the other hand, it seems that there is a tolerable interval of growth rate that will be tolerated by the government or the economy. For example, say 7% to 9%, mostly defined by unemployment rate and inflation. Because if the growth rate is too little, then there will be unemployment and an unstable society. But if the growth rate is too high, there will be inflation. And I think people or authorities in China are trying to look for other ways of promoting growth. For example, institutional reforms. And by having institutional reform, they'll promote this institutional technology growth, which will increase productivity. For example, the pilot Shanghai Free Trade Zone. But it seems people are having too much expectation or too optimistic on it. What's your thoughts or opinions on that? Also, promoting domestic consumption. I think the government is aware of it. Do you have any advice or good strategies for China to promote domestic consumption?
Well, I mean, to begin with, there's a couple of questions here. Number one, people are much more sensitive to unemployment than they are to growth. It's much worse politically to have high unemployment than to have slower income growth. And one reason Japan has stayed so stable, and you haven't had any real political revolt in Japan, is because despite the lack of growth, the unemployment rate has remained extremely low. It's still like 4.7%, I think is the last number I had for Japanese unemployment. And a lot of that is because you haven't done some of the reforms that should have been done to the service sector of the economy. So there's still a lot of overemployment in the service sector. Yeah, it's great if you go to Tokyo. I mean, the department store service is amazing. And you buy something there and they put it in this origami. You feel guilty opening up the package when you get home. But it creates a lot of underemployment in the service sector, but that's better than unemployment. But it makes it hard to do the reforms in the service sector. You may get a similar issue in China, that if you can maintain strong employment, then people will tolerate the slower growth. Also, I don't think there's a precise number that people tolerate. If you can get decent growth, I don't think people will really distinguish that much between 7% and 9%. It's still good. And you're still living a heck of a lot better than you were 10 years ago. And that's sort of what, am I doing better than my parents? That's really more relevant question. Am I living better now than I was 5 years ago, 10 years ago? So strong is good. If you get down to 4% though, then it might get tricky politically. Because then you don't see progress year to year. I think that's the question. How do you get people to consume more is the real question though. And one of the problems there is China totally lacks any kind of retirement system. There is no, the healthcare system is basically pay for it yourself. People have to save in that kind of a world. Because who's going to supply my retirement, especially with a one-child policy? You know, if I'm the one couple, I've got 4 parents to support. I'm not sure I can earn enough to support all 4 of them. It's a difficult issue, and there's not much investment opportunity that gives high returns that would allow you to save now for retirement. You know, certainly in any event, not going to help the people that are retiring now. So there's an incentive to save a lot of money to provide for retirement because A, you can't rely on your kids because can't rely on your kid to support your retirement. And B, you can't invest it at high returns because what counts is how much wealth you have, not what the saving rate is. So you need a high saving rate to provide a level of wealth that'll provide a comfortable retirement. Maybe the answer is institute a social security system that lets people, gives people a little more security for their old age.
And the reform in Shanghai free trade zone, giving market more decisive.
Well, that's good. I mean, that's good because it does bring trade in and it does create jobs, and that's good. But that helps a small section of Shanghai. That's not a big, for the country as a whole, for 1.2 billion people. It's not going to employ a significant percentage of them.
We know that China is a very big country and its development is not balanced.
Yep.
Eastern China contributes much more GDP than the Western China.
Right.
So I'm wondering whether the GDP is a reasonable way to describe Chinese economy. Is there any other better way?
Well, GDP is GDP is what economists use because you can measure it. But inequality is an issue in China. There's a huge gap between Eastern China and Western China, as you said. With Western China, the overall inequality in China is very high. It doesn't look like it because within any city it's not very high. But when you go east to west, you see a scale of income going down pretty sharply. A couple of things there. Number one, the children of those poor people in eastern China are mostly working in Shanghai. So some of this is age-related, and they're a little less sensitive to that. But the Chinese government is trying very hard to get more of the development into Western China. The infrastructure project is a good move at that because when you've got an export-oriented society, an export-oriented economy, one of the problems for Western China is you can't get the goods to the ports. So maybe by improving the rail structure, improving the road structure, you can make that a little easier. That's a good start. And they're trying to get industry to move into Western China. Maybe if you can get, for example, the fracking stuff to start working, that'll create some jobs. There's a reason why North Dakota has the lowest unemployment rate in the United States right now. But it's not going to be easy. And the population drain from Western China to Eastern China is going to continue.
Yeah, so my question actually in two parts. So the first part being that as the wage increases, as we saw that there's a rapid increase in wages in China. So like, is that going to sort of result into an increase in the living standards of the Chinese workers and hence a transformation of the economy from an exporting to more of an importing side? And also the second part of the question goes that as the cost of doing business in China increases, that again shown by the wages, is that going to sort of lead to a substitution effect for countries like India and other Southeast Asian countries with the cost of where GDP is maybe not growing that at that higher rate because of political instability?
I'm not sure India's growing pretty well, but anyway. China is going through this Asian model of growth, which is the same thing as Japan. One thing with the Asian model of growth has always been a willingness to change industries. As you get richer, as your wages go up, China's getting to a point where it can no longer compete in things like cheap clothing, textiles. And you can see now those industries which have gone from Japan to Korea to China are now going to Indonesia and Bangladesh. That's where the model works. And eventually we're going to run out of countries to ship the stuff to. So we'll actually pay more money for our t-shirts. But that's probably in the fairly distant future. So that, I think that's working the way it should work. And China is becoming less competitive in those industries. But at the same time, it's developing more technology and developing more educated workers. College education rate is going up. And as we saw in Japan, Japan went through this and really didn't slow it down very much in terms of running export surpluses, because you just start exporting different things. So if you can't export textiles, maybe you can export cars or iPhones. And that's where you make your money.
Also if you look at the dollar value of the exports and imports, the funny thing being that China's biggest imports are electronic equipment and China's biggest exports are also electronic equipment. So what I fail to understand is the relationship between those and the increase in the wages. I mean, clearly if you're importing the same thing and then you're exporting the same thing, in the same sector, it has to be that you're importing it to further enhance the value and thereby export it later. But the increase in wages sort of diminish the whole profitability aspect, if I'm sort of being clear.
Well, yeah, people look for cheaper places to produce the stuff.
Exactly. So also would this lead to China being more consuming? I mean.
Well, it has to eventually. You can't continue to run trade surpluses forever. But the imports and exports, oops, sorry. I'm going to go to slideshow in order to let you see this. This is what happens with the imports and exports. This is where an iPhone is produced. Where are iPhones produced? I mean, if you buy one of these things in China, right outside of Hong Kong, if I buy an iPhone and I order it from AT&T, which is where mine comes from, the first American to touch the iPhone is probably the UPS delivery man. They're made in China. But if you look at the actual production of the iPhone, only about 10% of it actually comes from China. Because that's where the final assembly is done. But if you look at this chart, where it's actually made, about a third of the iPhone actually comes from Japan. Because they make the chips that are in here. Another third, well, Korea produces about 20%. Germany produces about 20% because the optical systems come from Germany. Those are all imports to China that are then assembled into the iPhone and shipped back out. So a lot of the electronic imports coming into China are really re-exported in the form of the final product. So the value added that you get from China is actually pretty small relative to the total cost of the gadget. So a lot of this export-import is really for re-export. And you got to sort of net that out. The parts are made in Thailand, they're made in Korea, they're made in Taiwan, they're made in Japan, and a lot of the final assembly gets done in China. It's not just iPhones, a lot of other electronic equipment works the same way. So that's not as strange as it sounds.
No, but I was worried about was that, again, like as a pointer that if you're importing and exporting the same good, it's for the exporting, but if the wages increase, how would China transition into a new sector, as I said?
Same way Japan did. You develop more capital equipment to allow you to move into higher value-added industries. You develop more education to allow to train the workers that you need to produce iPhones instead of scarves. And you've got to keep up. You've got to keep running forward. And then when you get to the top, you've got to keep running. Sort of like the Red Queen in Alice in Wonderland. You've got to run faster and faster just to stay in the same place. Back.
Yeah, so this is more related to the Asian model. It's interesting to see how there's such a big divide between the Northeast Asia and Southeast Asia. And as you mentioned, cheap labor moving to countries such as Bangladesh and such. How can you explain this, the difference between Northeast and Southeast? I think it's a very good question.
Well, actually, if you're looking, for example, Vietnam right now, it seems to be following very nicely on this Asian model. It's just sort of 20 years behind. It looks like China looked 20 years ago. And it's growing very rapidly following the same model. India, however, the model is very different. In India, you have a much more domestic economy. It hasn't been able to do the exporting, except in the service sector, very well. And they're not on the same kind of a model. And Bangladesh is not on the same kind of a model. But what they have, it's moving down to those areas because what they do have is cheap labor. You can hire workers in Bangladesh for a tenth what you can hire them for in Guangzhou. So that's what they're going to do because they don't need a lot of training to run a textile mill. They don't need a lot of training to run a sewing machine. You just give them a sewing machine and take 5 minutes to instruct them in how to run the fabric through it, and you're off and running with a cheaper workforce.
Yeah, people are talking about China's SOE reform these days.
Yeah.
So what's your perspective about the SOE reform? So if it's going to do any good, what are we hoping for the SOE reform? What can be achieved at best?
Well, at best, what could be achieved is get rid of most of the SOEs, state-owned enterprises.
Yeah, to some extent.
And privatize all the ones that aren't sort of natural monopolies.
Yeah, but China is holding its grips on 7 basic industries. They're not. Yeah, China is not losing the grips on them.
No,
so.
because there's still a strong Communist Party influence here. that says that sort of heavy industry at least should be.
So as long as as long as in short term this cannot be achieved, what is the best we can hope for?
Well, the best to hope for, I think, is to keep it limited to sort of those real heavy industries, where I don't think the state does a lot of damage to the industry. So far, things like autos even have been private, pretty much. They haven't been state-owned, but things like steel, it's probably going to stay that way. Coal, utilities, I don't bother much because I think I can make a good argument they should be state-owned. I don't think you're going to get much reduction in the state-owned enterprises because I think politics are against it.
Yeah, there are some resistance there.
Yeah, so speaking about the retirement plan and Social Security, in your professional experience, are you aware about their presence in China? Do you know, like, there are these things, like pension plan and healthcare plan?
But there's no government pension plan.
There's no centralized
Right.
government.
There are for individual companies, there is for the government workers, and there are for quite a few companies have their own pension
Do
plans.
you know where they invest? My guess is mostly
I
in
don't think
fixed
they,
income.
I think most of them don't invest at all, quite frankly. I think most of them are relying on paying pensions out of future profits. There aren't very many pension funds that are built up much in the way of assets,
So they're not involved in the financial market.
not to any great extent.
That's probably not going to sustain the
No.
aging population.
No, that can't go on forever. And one of my favorite quotes from Herb Stein, anything that can't go on forever will stop.
And the feasibility of introducing a privatized pension plan.
Well, you can certainly do it. Chile did a very good job of it, for example.
If you look at the demographic of China, so
Yeah.
large population.
China's demographic is not terrible for it, but it's going to get harder the closer. The problem is with the one-child policy, China's beginning to develop an inverted age pyramid, where you've got fewer workers than you do retirees, sort of proportionally. And they're not unique. I mean, most of Western Europe's getting there faster than they are. The United States is getting there faster than China is, but China's moving in the same direction. And the closer you get to that, the harder it is to do any kind of pension reform because the cost is just too high for the existing, to cover the existing elderly. So, you know, it'd be nice to start now. But it's hard. It's hard to invest in China because what do you invest in? I don't know what I'm buying. If I buy a share of a company in the United States, I get an annual report. I have a pretty good idea of what they produce, how much money they make. In China, I don't know. I don't trust any of those reports that I get. Why? I don't trust many of them in the United States either. I'm a little more comfortable with the U.S. ones. How do you get around this if you're a big Chinese company? And there is an answer, which is that most of the largest Chinese companies list out of Hong Kong to make themselves subject to Hong Kong accounting standards, and which are a little better. But the domestic investor, the domestic Chinese investor, that's not so much of an option. It's difficult. So if you invest, you either have to invest with your cousin who's starting up a store in the next town, or you buy an apartment in Hong Kong, or not in Hong Kong, but in Shanghai or Beijing and hope the value goes up. Or you put it in a bank account and earn 0.1% a year interest.
Is that one of the causes why that savings rate is so high?
That's right, yeah. If you're a target saver, by the end of your life, you need a certain ratio of wealth to income in order to finance your retirement. You don't want to rely on your child completely for that. You're stuck. Some better investment opportunities available. Maybe the last question since we're on it.
Yeah, So do you think the RMB is a closed currency? There is not many foreign access to RMB, right?
Right.
So I guess that is also one reason that it is very hard for foreign investors to invest in Chinese companies and Chinese equities or anything, maybe fixed income.
Yeah, but you can invest in the red chips, the companies that list through Hong Kong. Technically,
Yeah,
you're
sure.
investing in Hong Kong dollars
Sure.
rather than renminbi, but that's irrelevant. They're operating throughout China. Anything else, you really have to go through a mutual fund that has authority to operate in China. It's almost impossible for an outside investor to realistically buy shares in any Chinese company except for the relatively small percentage that's listed on the Hong Kong exchange.
So will the status quo be going to the positive direction if China is opening its financial market?
Well, it's the right direction,
It's all right.
but you're not there yet.
Yeah. Far from.
You got a ways to go. Part of it's the accounting standards need to be improved. Part of it's the convertibility of the renminbi,
Yeah.
which they're gradually moving towards. Those things have to change. And it's going to take a while. I mean, China's complaining that nobody's using the renminbi as a reserve currency. How can you hold reserves that you can't automatically convert? I mean, why are you holding reserves? You're holding reserves so you can use them. And if you can't guarantee that you can use them, why would anybody in their right mind hold it as a reserve? So it's until they're willing to make those changes, and they're moving in that direction. But those changes have to be made. And I think will be, but not tomorrow.
Thanks.
Thank you.
I think